Welcome back to Capital Crew, where we navigate the intricate web of global economics and finance. I'm your host, and today we're diving into a thought-provoking topic that's been buzzing in financial circles. In previous downturns, the world turned to China as an engine of growth, but this time that driver may not be there. For years, China's robust economy has been the backbone of global economic recovery during tough times. But recent developments suggest a shift in this narrative. Could the tables be turning? As we explore the implications of potential Chinese deflation, we'll uncover how it could send shockwaves through interest rates, send commodity prices into a tailspin, and even reshape the landscape of electric vehicle exports beyond China's borders. So fasten your seatbelt, because this episode is about to take you on a ride through a shifting economic landscape that's about to impact all corners of the market. Let's dive right in. The recent quarterly economic update from Australia's central bank rang alarm bells as China's economic outlook emerged as a major concern. Even the International Monetary Fund, or IMF, raised a red flag, identifying China as a downside risk to the global economic balance. The world's second largest economy, though initially on a path to recovery from the COVID pandemic, is now facing challenges that could impact the world stage. China's economic rhythms have been diverging from those of wealthier nations, painting a complex picture. Over the past 10 months, producer prices have been steadily declining, while consumer prices have turned negative compared to the previous year. Younger urbanites are grappling with rising unemployment, reaching a troubling 1 in 5 in recent months. Real estate prices continue to slide despite rate cuts, in stark contrast to rising property values in places like Australia. The implications of China's economic journey extend far beyond its borders. Countries heavily reliant on China as a trading partner, including much of East Asia, Australia, and New Zealand, stand to feel the impact. Just recently, China reported weaker than expected trade figures for July, causing a ripple effect. Iron ore prices tumbled, and even agricultural commodities felt the pinch as cotton imports to China hit a 5-year low. Such fluctuations in demand can shake commodity markets and disrupt supply chains worldwide. The IMF remains cautiously optimistic about China's growth, projecting a 5.2% expansion this year and 4.5% next. However, a slowdown in China could create global economic shifts. Harry Murphy-Cruz, an economist with Moody Analytics, explains that while falling prices in China can assist in the global fight against inflation, a lackluster recovery from the country could dampen medium-term global growth. In past downturns, China has often stepped up as a growth engine, but this time, structural property concerns and a transition to consumer-led growth might limit that support. China's government is unlikely to remain passive in the face of these challenges. They've already initiated measures like interest rate cuts to tackle deflation and maintain their status as an economic powerhouse. While some economists, like Murphy-Cruz, believe that China's deflation wouldn't persist, the government's efforts to stimulate tourism, car sales, and renovations suggest a proactive stance. If China's efforts fall short, surplus production capacity could pivot for export markets. China has been making strides in the automotive industry, overtaking South Korea and Germany in auto exports. Japan is now within their sight. Recent data shows China's auto exports surging by over 50% from the previous year. This growth, especially in the electric vehicle segment, could disrupt competitors and prompt responses from other market players. In essence, a slowdown in China's economy is a double-edged sword. While short-term relief from falling prices might benefit central banks' efforts to combat inflation, the longer-term consequences could reverberate through global growth dynamics. As we navigate the shifting economic terrain, it's clear that the world's reliance on China as a growth driver is facing unprecedented challenges. The intricate dance of China's economic performance and its far-reaching impact on interest rates, commodity markets, and electric vehicle exports. As we conclude this enlightening exploration of China's economic landscape, just remember that staying informed is the key to navigating the ever-changing currents of the financial world. If you found today's discussion valuable, make sure to share your insights and questions in the comments down below. Don't miss out on our future episodes that break down complex financial topics like this one. So if you're eager to stay ahead of the curve, then don't forget to hit that like button and subscribe to Capital Crew. Your support fuels our mission to demystify the world of finance for you. Until next time, I'm your host, and remember, the more you know, the smarter your investment. Stay tuned and stay financially empowered.